When you look at the current state of the negotiations, there's no question that the $600 check is going to be something that Senator Bernie Sanders and Congresswoman Alexandria Ocasio-Cortez are not going to be able to get behind. They've already said as much publicly. But from another perspective, Senate Majority Leader Mitch McConnell, in negotiating, has shown a willingness to remove liability protections. The Democrats have also shown a willingness to significantly lower their at the original state, $3+ trillion, then $2.4 trillion price tag. And so the bottom line here is that this is an initial round of stimulus. It's impossible to look at this that there is any clear winner on either side, or if you triangulate it, even coming from the White House. And as a result of that, it again, from a fact of the matter perspective, will likely pass stimulus in the next 7 to 10 days.
Kevin, what is the focus on the Biden administration on vaccines? Like, how fast and quickly can they move on the pandemic?
Yesterday, Fran, the President-elect's transition team announcing formally many of the vaccination picks and the team of experts who will be working in terms of the rollout of the vaccination front. Three things. First and foremost, President-elect Biden promising 100 million vaccines in his first 100 days in office. Secondly, the rollout of that vaccine, the trust that the American people have in the vaccination process, going to be crucial. You're already seeing a bipartisan group of senators working to fund a mass education system on the vaccination front for, again, there to be that trust. Third and finally, the supply chains, the domestic supply chains. Yesterday, the current president, President Trump, saying that they are continuing to work on the supply chains to make sure that the rollout of the vaccine is both effective, and the incoming administration is obviously going to have a lot of work in the execution of that as well. But you cannot look, I mean, even in Roosevelt years, you cannot look at the current state of affairs and argue in any which way that the rollout of the vaccine, that will be the dominant force in President-elect Joe Biden's first 100 days in office. It will spur the talks for another round of stimulus in the first quarter of next year. It will urge the education community to try to get more funding in terms of the rollout of this, and it will really set the tone for how effective the executive branch across the board, from geopolitics to domestic, can set up a 4-year term for President-elect Joe Biden.
Kevin Cerulli, thank you so much. Our chief Washington correspondent this morning. Futures up 7, Dow futures up 81 as well. On the political front, this is an interesting conversation. David Weston with Jay Clayton. He's exiting as SEC chairman. This will be timely given the state of global and American Wall Street. Stay with us. This is Bloomberg. York surveillance. Good morning, everyone. Tom Keene in New York, Francine Lacroix in London. Lots of distractions, Brexit, dinner in Brussels. We've got what Kevin Cirilli was just talking about. And then there's the markets and where you are and what you've missed. Gabriela Santos is at J.P. Morgan. She's Senior Vice President, What You Missed in 2020, and we're thrilled she joins us this morning. Gabriela, a year ago and 2 years ago, you said one day international stocks will move. With a vengeance, they have moved. Let's begin with a why. Why did international stocks light on fire this year?
Yeah, we've had a very good year for international stocks, specifically a very good November, where international outperformed U.S. markets by 300 basis points. And I think you have a confluence of factors. First, international, given its decade of underperformance, has much more favorable starting points than U.S. markets do. And here I'm thinking of valuations as well as the currency. We also have a very good aligning of factors for international, which is the beginning of a brand new economic cycle. That tends to be very good for cyclical sectors, which have a much higher representation in international markets than they do in a very defensive market like the U.S. And we've also had a big decrease in uncertainty, so it helps risk appetite as well.
Gabriela, you know I go all logarithms on you. I've got to do that to keep up with you. And the answer is we reminisce about the slope of international markets in the 1990s. And then there was some miserableness for X number of years. And we've got a little bit of a reaffirmation of that constructive slope. Is it just about the U.S. dollar? Is that all this analysis is?
Well, the U.S. dollar is really a symbol of other things that are happening. So to me, the dollar speaks a lot to what's happening, for example, with growth outside of the U.S. relative to the U.S. And really the big issue for the past decade or the past cycle was the fact that the U.S. economy went through the global financial crisis and it kept on chugging forward. Meanwhile, around the world, regions had to deal with additional crises, the sovereign debt crisis hitting Europe, as well as the commodity bubble burst hitting emerging markets. So you had such a big disparity in growth and in interest rates as well overseas relative to the U.S. I think the really important thing to keep in mind is we're starting a brand new economic cycle right now. And we do think that we're starting on a much more even playing field, the U.S. versus other regions. So this is really the kind of environment where the dollar can strengthen and local international markets can do well.
Gabriela, is there anything in bubble territory? Like, if you look at the real economy and where markets are, does the real economy just catch up? So fundamentals are strong, they just need to get a little bit stronger? Or is there a real mismatch in certain parts of the markets?
Well, we've had such an interesting year. The first part of the market recovery from late March to late October was really all about that virtual world, so very separated from really what's happening in the real economy. It was really November where we started to get that expectation of a catch-up in the real economy. But it's really only the beginning. We still have very depressed cyclical sectors here in the U.S. and around the world. But it is important for the real economy to catch up next year, and we do expect that it will, with the broader distribution of the vaccines and economic momentum building and building as the year progresses. To your question about a bubble or caution, one word of caution with asset performance in November. And this is a stat for specific to the U.S., but really symptomatic of a broader trend, which is it was the worst month for the quality factor in close to 11 years. That means that investors were equating cyclicality with junk. And that is not at all what we're advocating for. We still believe in looking at the quality of the companies we're buying because we still have a pandemic to get through before these companies are able to thrive in the post-vaccine world.
Gabriela, how long will it take for the economy to catch up to the trend we should have been on had we not had the pandemic? And what does that mean for stocks?
So regionally, there's some very big differences. For example, China has basically already caught up to where it would have been. So North Asia, China specifically, very much ahead of the pack. When it comes to the United States in terms of catching up to trend,